Greetings, Algo artisans. It is Tuesday, and we are humming along. Yesterday, the market was a bit quiet. We had some European holidays. Banks were closed. I'm assuming there were holidays. I'm not sure why French, German, and British banks were closed, but they were. So that did leave the market to be pretty quiet. Now, the market did start to pipe up. I was up late looking for trades. It was still pretty quiet at that time in the Forex market. However, what we are going to do is take a look at me being correct. Yep. Now, I posted this. I talked about this publicly on the 16th, and we're going to look at the charts right now. Good morning, Marge. Good to have you on the show. So let's just take a quick look, a little bit of a victory lap as I share the screen here. Yep, that's what you call a win right there. I called this thing. I know some people who actually got in right at the bottom of the range, right? So this big rectangle that you see, right? This is the Bitcoin daily chart, really the 18-hour chart going back to 12 March, or even you could say early March, 10 March, whatever it is. Price has been bouncing around in this range for quite some time. And really defined range since mid-April. That's when it really was more defined. Price did dip below, and this is in very much a what's that pattern called? I'll think of it in a minute. Hey, somebody in the comments call it out. It's the Wyckoff, very much a Wyckoff pattern. In fact, we'll probably take a look at that right now. I should have had that ready before the show. Wyckoff pattern. So Wyckoff pattern is both a distribution and accumulation, right? It goes both up and down. And so I'm going to try to find a good image of this. Really, this is it right here. So Wyckoff accumulation. Okay, I want the image. So I guess I'll just zoom in on this. Okay, so if you look at the screen here, right, this is very clear what just happened with Bitcoin. So let's take a look at Bitcoin. Price headed down. Now this is okay, so accumulations can happen on the way up and down. So let's talk a little bit about some basics in trading. You've got accumulations, you've got distributions, right? And accumulation is when you have a consolidation of some sort, and then it continues up. Let's put some more room on the screen here. Can just show this better. So an accumulation can be a continuation where most accumulations actually that are easily recognizable come after a sell-off. So price sold off, and then price kind of bounces around in some sort of range and then heads back up. That's going to be considered an accumulation, and you're not going to know if a consolidation is an accumulation until price makes a direction afterwards, right? If price heads down after a consolidation, then it is actually going to be considered a distribution. But if heads up, it's going to be an accumulation. So as price heads down, more people buy than sell, right? People are selling, people are buying, but in the end, it becomes a group of buyers because price heads up afterwards. Now, if price is headed up and it does this right here, it's a distribution when price heads down afterwards. So if there's a consolidation, price heads down afterwards, that is considered a distribution. However, one thing that people sometimes forget is that an accumulation can happen on the way up. So price could actually be heading upwards, accumulate, and then head up further, right? And distributions can happen on the way down. So price could be basically heading down after sell-off a bit more and head down afterwards. And what we're looking at is some people call it a vertical accumulation. You start to get into terminology, but price with Bitcoin obviously has been doing a bunch of accumulations on the way up. Any of these consolidations that you see on the way up, those are accumulations because price continues up afterwards, right? A lot of these accumulations follow a very similar pattern, almost all of them. You have price kind of bouncing around, and then it dips a little harder at the end and goes up. You can see it here very clearly, right? You do have a deviation in this case. Price kind of tried to break up, and this was the Bitcoin ETF news right there. So there could be a sort of exogenous shock affecting the way that this particular Wyckoff plays out, but it does dip hard before it goes up. It's very clear. Here, even in this little one, I could zoom in on this smaller bit right here where price bounces around and dips a little harder at the end before it pops up, right? Well, here we're going to see the same thing. By the way, for those of you who are in the private group, V the Gorilla will be with us, he just said, in about 10 minutes. So he's going to join us in the private group, not for the public live lab today. So here you are, and this one is extremely clear because it's just on a much higher time frame. Price bounces around, makes a hard dip, heads up, and pops out. Well, what does the Wyckoff method say? Pretty much exactly that. You got price headed down, bounces around, dips a little bit harder here at the end, accumulates at the end on the way up, and that is literally what's going on. Now, you see this arrow started back on the 15th of May. That's when I drew this. I believe I even talked about it on YouTube videos on the 16th. It's on Twitter. It's right there for everybody to see. Anybody in Algo Factory got to see this earlier, right? But anybody on Twitter got to see this, and I called it. And I mean, this really is following what I said. It's even happening a little bit more quickly than what I said would happen, but this has become incredibly accurate. So I'm going to go ahead, I'm going to copy this and paste it up on Twitter and finish my victory lap here, at least for the moment. Now, price, again, if it consolidates and breaks upwards, this might happen a little more quickly than I thought. I thought we wouldn't see a break of all-time high until June. And yet we're sitting here at May 20th, and price is touching real close to that all-time high. It touched top of the range. Now, range traders would actually short this right now. Given where we are in the Bitcoin bull market, I'm not sure that I would short it. Right now, longing this was a smart move. I know some traders that longed it, and that's a trade with a lot of conviction right there. So good for them. In this particular case, though, Bitcoin during a bull market, I shorted this based on some metrics, and I was in profit for a bit right around here. I did think price might revisit at least a little bit lower. Didn't even do that right about here. I did have, like I said, some profit at one point, but I got stopped out of that trade. And I pretty much made the decision like, okay, if this is going to continue to go up, I'm not shorting in this bull anymore. Like, it's just bad odds. I mean, I can win overall shorting during the bull. I can make profit doing that, but the odds are far worse than just going long. So, but that's the look. I mean, this is really the look. So let's go over to X and continue the victory lap. We'll do it like this. By the minute. Okay, so there you have it. I mean, anybody following me on X or Twitter is pretty much getting free money in that case. So, I don't post a whole lot of trades on Twitter like that. And again, anything I do post is not intended as investment advice. It's all just chart education, right? But anybody who gets this data and checks it by their own research and makes a trade that looks like mine, that's money right there. That's just money. So this is most likely what's going to happen. And the algos are rather bullish at this point. They're defying the resistance that is being placed upon them by purely algorithmic standpoints. Let me just take a quick look. Yeah, algos are bullish right now. It would not surprise me to see all-time high this week, today. I mean, really, it could easily happen. Again, it is at the top of a range. I would not be shorting this. In fact, I would not be longing it either. I would wait for a break of this. I mean, the safest thing to do is to long the all-time high probably after it breaks the all-time high. But from a range trading standpoint, it's probably okay to go long once it breaks that. There are people do their ranges differently. Some would have the range a little bit tighter than I do. Some wouldn't. So that's, there is, and I know there probably shouldn't be, but there is a hair of subjectivity to a range. I would have the range, just getting real precise with this. The top of my range for these purposes would be something like 72,735, something like that. So just, just a basic framework, but you really got to do your own research, make your own decisions, so on and so forth. Let me see if we got any questions in the comments. No, we don't. Now we are at the end of the public live lab. So come on over, zap the QR code you see in the top right-hand side of the screen. If you want to learn how to do this, if you want to learn how, and this is just basic price action. Yes, I do use algorithms to give me an edge on this. And that's pretty much how I trade. I use algos to give me an edge on price action. In the end, nothing is going to be more efficient or faster than price action. Price action is going to be quicker than anything else. However, to understand the odds of a play working out with price action, using the algos really helps out. So come on over, algofactory.tech, trade your job, upgrade your life. And of course, I'll leave you with the famous,
join us or die.